Hey guys, welcome back to the channel. I'm Vincent Loo here, and today we're gonna have a very special series. Alright, we're gonna do algo trading versus manual trading live. I'm gonna demonstrate and prove to you guys why algo trading works. And I'm gonna prove it everything here in this YouTube channel. So stay tuned and subscribe. So why do we use algo trading, guys? We can think of it like because it's statistically proven, okay, in algo trading we're gonna calculate everything, do some maths and science, and then we have a data driven algorithm. We use the data and we find and optimize it, and we get the best strategy in algo trading. Then we're gonna run it and execute it 24/7 in cryptocurrency. How amazing is that? If you guys think that's amazing, comment below, right? Comment below. And how about manual trading? Okay, number one, manual trading is flexible, or you can call it like emotional. You can either maybe today I'm feeling happy, I'm gonna long it or short it. Basically, manual trading is inconsistent. That's the right word. But still, some people always say it's flexible. Okay, it doesn't have a fixed rules. That's why it's flexible. Basically, you are using a personal judgment to do trading because everything is like a prediction, guys. Okay, you look at the charts and you just predict. Okay, you can just predict it's gonna be like this, it's gonna be like that, based on what? Based on your own personal judgment. Maybe you are seeing some other indicators and other data, but majority of the indicators they are lagging. Okay, some other data, maybe you can use some other data to interpret what's market feelings, right? Macro analysis and so on. That's why it's flexible for manual trading. And I'm gonna do it in this channel. Okay, I'm gonna do both and show you guys how it works and the beauty of it. So algo trading is technologically driven. We use technology, right? There's so much technology right now. It's really a no-brainer not to use them. And how to use them, I'm gonna teach you guys everything. Okay, and basically it's stress-free. Algo trading, it works 24/7. You let the algo to run. And manual trading is time consuming. We know it. We need to constant monitoring, and there's a lot of lost opportunities. Okay, you need to sleep. You need to work. Some of you guys need to work, and basically we need to have life. It's impossible for you guys to always monitor the market. So that's the downside for manual trading. And just to let you guys know, okay, I'm gonna show you guys a back test result, and to prove to you guys, algo trading is actually a long term. Right? It's a long term because algo needs long term run to see the equity curve. You can't run it just a few months and then prove that this algo is not working. That's why we need a back test. Right? We need to do back test, and we can estimate how long do we have to let the algo run. Like what are the statistics? Where I shall explain to you guys everything, and it's stable, guys. Okay, because it's long term, it's stable. You're gonna run for a few years. That's the aim and that's the goal, which I'm gonna run it in this video, YouTube as well. And the execution of trades always immediate. It based on conditions, immediate. That's the beauty of algo trading. For manual trading, basically, I would say it's more towards a lot short term. Okay, the most the most longest trade you're gonna open maybe just a few days. It's short term, and algo trading you gonna run it forever. Manual trading short term is fluctuating. Okay, your P&L, your equity curve is always fluctuating, unless you're really a good traders and you know what you are doing. Okay, your P&L, you're gonna win and lose a lot, but we're gonna set some rules, right? Some rules in here. I'm gonna show you guys what are the rules to minimize loss, as well as it's manual execution. Okay, manual trading, manual executions, pretty much very straightforward. So I'm gonna do this challenge, the algo trading challenge and the manual trading challenge, which I'm gonna start off with 1,000 USD using the algo trading, and manual trading I'm gonna use 100 USD, and I'm gonna show you guys, okay, why manual trading is not worth it, right? It's totally, it's not performing as well, right? It's not performing. That's why I allocate small amount. But how do we prove, right? Manual trading and algo trading, actually the algo trading was better. So even though the quantity is different, so we're gonna use percentage gain, percentage gain, and we're gonna do it by weekly and monthly. Okay, so it's gonna be a long journey. I hope you guys go through with me, subscribe to follow. Okay, and the strategy I'm using in the algo trading, I'm gonna use leading factor, right? This is where I'm gonna teach you guys what are the leading factors I'm gonna using in this video series. I think I'm gonna call it Algo versus manual trading series. I'm just call it like that, straightforward. And for manual trading, in order to protect my capital and to actually trade for long term, I'm gonna use 5% rule. Every trade I'm open, I'm gonna use 5% as risk, like just 5%, which I'm gonna tell you guys how to do it. And for algo trading, we're gonna be a weekly update, a weekly update. And for manual trading, it's gonna be either when I open a position, then I'm gonna update that, and when it's closed, I'm gonna update that as well, or I'm gonna open a new position. And since I don't like to constantly monitor the charts, I'm gonna use 1 day time frame, right, to do the manual trading. Okay, so if you manage to always monitor the chart, you can use hourly time frame. Right? If you are scalping, you can use minutes or second time frame. But it depends on what kind of trade style you guys want to use. For me, I like it to take it simple and slow, so I'm gonna use weekly and 1 day time frame. Okay, long time frame. So let me share with you guys the differences between algo trading and manual trading. Manual trading is basically discretionary trading, as you guys can see here. Okay, we see at the facts and our own beliefs, and we ignore the rest. We see the Twitter tweeting it's gonna go up, it's gonna go up, right? All the bulls are saying it's gonna go up, it's gonna go up. Then you buy in and then you long it, or you say that there are a lot of bears, right? A lot of bears in the market. Everybody is saying, right, it's going down, going down, right? Recently, you have the Iran war, Iran and Israel war is going down, and then you sell it. These are basically discretionary trading, your own personal judgment, and look drawing lines at the charts. And I'm gonna trade that as well. Okay, the challenge, right? The 100 USD challenge. I'm gonna use manual trading, which is a discretionary trading. Okay, is to just prove to you guys how algo and manual trading works and what are the differences. And of course, for the algo, I'm gonna use this leading factor. Okay, this is my back test result, back test template right here, right? Back test. I'm gonna explain to you guys everything about here that you guys see. So first of all, we have the statistics. Okay, so this back test using this leading factor, we have a Sharpe ratio of 3.41. Any strategy with a Sharpe ratio higher than 1 is a very, very good strategy. And this strategy leading factor can give me about 3.41, which I'm gonna teach you guys in this series as well. So stay tuned to the next video. Average per return, average average return per year is about 166. Imagine, okay, you put in your bank fixed deposit, how many percent? At most 3% per year. This strategy is like an investment. You put it in, invest, and over the year, 1 year, you can get 166. How amazing is that? It's crazy not to do that. And we have a common ratio of 7. Okay, it's actually very high. So Sharpe ratio, if you guys don't know, Warren Buffett's Sharpe ratio is only about 0.79. And Warren Buffett's right now have a capital, right? The funds, right? The Berkshire Hathaway funds right now is at 1 trillion. Okay, the market cap of Berkshire Hathaway is 1 trillion. So it's very, very, compared to him, we have a high Sharpe ratio. Okay, high Sharpe ratio. And we have other stats as well for you guys to understand how this algo works. The maximum drawdown is about negative 22%. Okay, if I put 1K to use this algo trading, the maximum algo drawdown I can think of is I will lose 22%. So what's 22% of 1K? Okay, I think it's around 220K hundreds. 220 hundreds. So if you see you lost 220 hundreds, you are still okay with it because you back tested it. You have a potential of losing 22%. Okay, 22% drawdown. Right? Because it's gonna go up anyway. Because as you can see, I have the longest recovery in 44 days. Okay, after I draw down 22%, I can expect it to recover back to its peak, right? Somewhere in 1 month. So we need this statistics to tell us, okay, it's not that it's not working, right? We still need to wait longer, okay? As well as some stats like average trades per day is about 34, right? 34 trades per day, okay? 34 trades per day. So this, we are using a very low time frame algo. That's why it can't right? It can react to the market very fast. That's why you have so much trades per day, right? So much trades per day. And we can expect this back test, I run it from January 2023, okay, 2 years ago to right now. As you guys can see, the price of crypto right now is at 60K. So we can see it's about x3, okay, for 2 years about x3. So we can expect what kind of result, what kind of returns are we expecting. So that's the beauty of back testing, right? That's the beauty of back testing. And if you want to learn everything that I said, you guys can join this free course right now. Link is in the description below. Free sign up and learn how to automate your crypto trading. Trust me, you will not regret it. This is a webinar. It's totally free, guys. Totally free. It's a no-brainer not to join. Okay, and I'm gonna post every result, every trading results in my X, right? In my Twitter X. So link it in the description below and follow my trades. Right? Follow my trades, algo trading, as well as manual trading. I'm gonna prove to you guys how it works. And obviously subscribe, guys, to follow up this series, okay, of algo trading versus manual trading. See you in next week. Peace.